Welcome to Rich Keys Trading Channel, where we unlock one candle at a time. Please pay attention to the disclaimer on your screen. And with that out of the way, let's get into the charts. All right, welcome back, my fellow traders. Today is Sunday, the 30th of November. Time is about 8:03 a.m. New York time. And as usual, as I always remind you, this is not financial advice. The analysis is just for you to get my perspective, maybe learn from some of my analysis strategies, and use the analysis to make your own analysis as well as your trading decisions. It's not a recommendation to buy or sell anything. I'd like to continue this weekend's analysis with the indices, and I'd like to look at the SPX 500 and the NASDAQ 100 in this analysis session. Since it's the end of the month, today is the last day of November, I would like us to look at the monthly chart down to the weekly, and then we shall look at the daily and 4 hours and hourly to see trading opportunities and investing biases as we enter the month of December. All right, so this is the XPX, and I'm getting the data feed from Owanda platform. So the XPX closed the monthly with a hanging man. This is not a great candle for a continuation. However, I'd like to spare a little bit of a caution. A hanging man is not an implicit reversal based on the candle alone. We'll have to look at the cycles, look at our momentum, look at our RSI, and then, of course, this candle is only confirmed if the month of December we happen to close below the body of this candle. So pay attention next month when we look at this analysis. If next month candle closes um, below the closing of this candle, that confirms the hanging man, and that also confirms the official uptrend on the indices as over. It would really spell a very bearish signal for the month of January 2026 going into February. So let's keep that in mind. And briefly, I just like to look at our indicators. So indicator wise, our RSI on the monthly is very overstretched. Our RSI is reading around 87 on the monthly. And in previous month, we've hit about maybe 90, 91 before we had a reversal or a correction. In 2018, RSI was all the way at about 99 before we had our bearish divergence that shut us down. So here, the question is this it? Like I said, based on the candle alone, we need to get confirmation because we could probably get RSI pushing slightly up towards the 90 and maybe even to the 99 level. So there's some level of caution. However, when I look at this chart and I look at these two RSI, there's interesting thing to look at here. Let me see if I can bring this down a little bit. Okay, so here, this is our previous high. Okay, previous high on the monthly was somewhere around here. We have done a higher high on the monthly, and as well, if you come and look at your RSI setting, okay, to see whether there is some form of a divergence. We don't have a monthly divergence. Here was our previous high. Here we've made a higher high. RSI is made close to an equal high, but slightly higher. So it's not giving us a direct confirmation yet. However, it is quite overstretched, and that suggests that potentially we would have our first correction, potentially maybe go up, and then we get our divergence. So that could just be the end of the move, but we don't know yet. So let's keep that in mind based on the monthly. Other good things suggesting that our monthly is hit is the stochastic cycle went all the way up to about 96, and it's already crossed on the monthly. And that, as you can see, except when we do grind like we did here, we crossed, came down, went back up, but we formed a divergence. Unless something like this is going to happen, for me, as I see this, I consider the move up is almost closing or it's almost ending. So I'm not bullish on the indices. I'm looking for short positions at this point in time. Of course, if it's invalidated, I'll protect my capital. But based on these settings, I don't think there is too much of a further move on the indices before the collapse occurs. Now, of course, as I was looking at for divergences on the monthly, I could find only one on the MACD. So MACD previous high was somewhere here. That was before we started our rally into this all-time high, and now we have formed this lower MACD trough. So this and this is a divergence on MACD, and this is standard MACD settings, 1226. So again, based on the MACD, I'm not too. And then of course my first setting, this is not very reliable for long term, but it's also showing there's weakness as momentum is coming out, even on the monthly chart. So I'm not too bullish on the indices, as I said. My long term RSI is also hit oversold. I mean, overbought territories. Okay, potentially suggesting we could be coming down. We haven't shown any weakness yet, but as you can see, RSI is going sideways, which means there's no strength to the upside based on the monthly. So as we have painted our monthly picture, let's step down to the weekly, and then let's look at the daily and 4 hours to decide what we're going to do in the month of December. So quickly, if I look at the weekly, okay, so the weekly surprised everyone, and it surprised me too, because we sold hard. We came to find support on the 21 weekly moving average, and I was expecting us to bounce off this 21 for sure. I just wasn't expecting that we're going to close above this candle. So here got me surprised. My rise target was somewhere around here. However, we just exceeded it all the way close to where we began. Now I want to zoom up here and let you see something here. So where did we come to based on this bullish move again on very weak volume? Look at the volume here. Okay, this is a very weak volume. This is what I call volume price anomaly. Okay, so such bullish candle reversal from a bearish, but then pushing all this way. This is a market maker move. This is a manipulation move. I don't trust this as continuation, as bulls are in charge, bulls are going. The volume doesn't confirm the candle. The other thing that I also want you to pay attention to is that this move came to a resistance level right now. This resistance level, it's a confluence of two Fibonacci levels. Okay, so the first Fibonacci is an extension 100% from the lows of 2023 October. If you take the lows of October 23rd, okay, 2023, and you do an extension, Fib extension, this is 100% level. Guess what? When I did a Fib retrace, okay, from the high to this low, okay, this retrace comes exactly to the 0.786. So this level here, which has already proven itself as a resistance in how many weeks? One, two, three. 3 past weeks, as a matter of fact, four weeks in a row, this area has always posed as a resistance, and we have come right to it on weak volume, on low volume. This is market maker trying to offload his shares at the best possible price. I don't trust this. I don't think this is going any further. However, if it does break my rules and it continues further up, my stop loss is right about here. Okay. As a matter of fact, I put my stop loss with a little bit of a wiggle room just in case they try to clear some stop losses before they move down. My stop loss is right here, right at 6,885. This is where my stop loss is. Any move above here could potentially tell me that, okay, the market is changing its mind. It started on weak volume, but maybe it's building up new strength. So I'm bearish on the indices. Stop loss right here. I envisage that this move here is the resistance, and it's also based on the topping candle that we had here. This candle here signaled the topping. Right after this candle, we've done a very strong sharp sell. So if you step down to the daily on this pattern, the daily MACD is still up. And so for confirmation, you might want to wait for the MACD to cross down if you want to play safe. If you want to play the high risk, high reward, you could short right here. Your stop loss somewhere around 68.85, and that's what I'm playing. But if it doesn't work out, it's just a small loss relative to a potential big windfall. So, but if you want to play safe, I would say wait for the MACD Where's my MACD or normal MACD is here? No, there's a first one. Let's look at the normal one. The normal MACD is crossed up slightly, so you might want to wait for this MACD signal, okay, because it's just crossed up and it's giving you green histogram bars. You might want to wait, have this cross back down. That will confirm that our way to the downside is still intact. But then if you look also at our stochastic cycles, our stochastic cycle is already hit cycle high. Cycle high, hitting a resistance, it can get better than that. So I'm bearish on the S&P 500. I think generally this is probably an ABC pattern that is formed. And if I go to the 4 hours, this is what I'm thinking, and this is what I'm seeing, that the move up here was 1, 2, 3, 4, 5. So that's an impulse bearish move, found support here, and we have retraced a wave B to this level. So I'm expecting this to be like an A, B, and a C pattern, with target coming somewhere all the way down to probably this zone here, somewhere around this liquidity zone here, which is 6,388 thereabout. So that's my target zone for the SPX 500, coming into the month of December and probably into the month of January. I'll quickly look at the Nasdaq to see if the story is any different on the Nasdaq. And here again is the monthly chart for the Nasdaq 100. And again, on the Nasdaq, as we can see, we also close with a bearish hanging man. Okay, this is a very bearish candle, in my opinion. Indicators wise, RSI is already dipped down on the monthly for the Nasdaq, showing weakness in strength. Our stochastic cycle on the monthly is already crossed, supporting our thesis that the move up is done. MACD, and this is normal MACD setting, is showing us that we have some form of a MACD divergence. Look at this trough here. This is your previous high trough. We came down. This was the April Trump, sell off, and then we have rallied up. But then look at this trough and look at this trough. There is divergence here, where you have your high here. You have made a higher high, but your MACD could not overtake this high. So again, here I see some divergence on MACD, but one would say it's not so strong. You could keep that. MACD hasn't crossed down yet on the monthly, but it's a matter of time before MACD catches up. Uh, Usually, this indicator is one I trust quite a bit. That's the 21 period RSI that I use. And here you've already dipped down, showing weakness in strength, even on a high time frame as a 21 period on a monthly chart. So the story is not much different on the NASDAQ 100. If you go down again also to the weekly and to the daily and 4 hours, you would realize that the picture I painted on the SPX 500 is very similar to what the NASDAQ is also doing. So if you come down to the, let's look at the weekly briefly. So the weekly has an interesting pattern that I observed, all right, and it's done pretty much close to it. So if you look at this pattern here, and this pattern I picked up from here. Okay, so let me see if I can actually show you how I picked up this pattern. So if you bring out this pattern here, okay, if you take out this pattern here, this was the topping pattern before our sell-off in April. All right, so this is right here. We came down, did all these moves up, and then we had our final boom to the downside. So I just wanted to see whether there's some similarity to the topping here, and apparently it's amazing. It's amazing how it's kind of similar, not the same as in candle strength and pattern, but if you come and position this right here, okay, position it right here. um Let me push it down a little bit. Okay, we did almost the same thing. We pushed up, and we could probably do this on the Nasdaq before our final collapse. However, looking at what we saw on the monthly, the hanging man, and looking at what I see on the daily here. So here we pushed up above our closing of the previous candle, our opening of the previous candle. And but the volume is not significant. I mean, you have this volume, this price action, this volume is not significant. And this huge volume that we have here, I want you to compare something that is interesting. See how this huge selling volume compares with this huge buying volume at the beginning of the move. I think the smart money has exited, and they're trying to trick retailers to maybe buy into it so they can sell the remaining of their shares at the best possible price. But obviously, if you look at this huge volume here, this huge volume here, equal height of volume, the volume that began the move, the volume that has already exited. So again, I'm bearish on the Nasdaq 100 as well. On the daily chart, it's interesting. So on the daily chart, I see this is also forming an ABC pattern on a higher time frame, and maybe an AB and 1, 2, 3, 4, 5 impulse correction. Now, while we're able to count 5 impulse waves on SPX 500, I think the Nasdaq is lagging and is about to do its 5 wave impulse move before maybe it might do a little correction and finally the collapse on the Nasdaq 100. So there is some more strength in the Nasdaq probably than the SPX 500. However, if you look at this pattern that I'm looking at, this also came to a Fibonacci measurement of 0.618. Okay, so if you do a retrace from here to here, okay, from the top to the bottom, this retrace falls exactly as the Fibonacci 0.618, which is the golden zone on the Fibonacci measurement. Now, if this level fails, again, if you're going to take a short on the Nasdaq, watch this level carefully. For me, invalidation level is at this point. If we do get a candle open and close at this point, it means we're probably shooting for a double top. Again, this is where I would say for those that want to play it safe, MACD on the daily chart is still above it's still above zero. So you might want to wait. We have a MACD cross on the daily chart right here. So you might want to wait for this to finish its process and cross back down. You might want to wait for the MACD histogram bar to tick below zero if you want to play it safe. Now, for high risk, high reward, you could take your short right here. Maybe your invalidation point is your stop loss right here, and you let it ride. Now, I think, if this should work itself out, I expect the NASDAQ 100 to make a destination somewhere around the 23,032 zone, somewhere around here, or somewhere around this 200 EMA. Now let's not forget, this EMA might either go this way or might meet us somewhere here. So the target might not be exact, but I do envisage this 200 EMA will be touched on the daily chart for the pullback on the reversal on the Nasdaq 100 trade. Indicators wise, as I showed you, we already at cycle high here on my stochastic. More likely we're going to turn down in this particular week that we are beginning. And RSI is also giving us a lower high here. Now, even though RSI has come all the way to this level, I do see potentially as this being, if you compare this high and this high, this is a hidden bear right here. Okay, let me see if I can show it clearly. So this is your previous high here, and this previous high corresponds to this RSI level, right? Now this high is higher than this. However, your RSI has made a higher high than here. So you're creating a lower high here, and that's if this level holds. This is a lower high compared to this high. However, your indicator is made a higher high. That is a hidden bear waiting to get spring into action. So again, I'm bearish on the Nasdaq 100. And as I usually don't like to spend more than 20 minutes on my analysis video. I'll wrap up this video on the 4 hours briefly, and we would get into other analysis in a different video presentation that would cover the Bitcoin, Ethereum analysis. So stay tuned for that video. Thank you. Have a great trading week. Cheers, everybody. Thank you for listening and unlocking trade ideas and insights with us. One candle changed everything today. I hope you can already see how today's analysis can transform your trading decisions. If today's breakdown helped you spot opportunities or potential risks you would have otherwise missed, please consider subscribing and imagine what we will uncover together next time. Kindly give the video a like and share with an investor or a trader you care about. They would thank you when it saves them from a bad trade or a missed opportunity. Until next time, Keep unlocking profits one candle at a time, and we'll meet again in the next video presentation. Cheers.